Hi, Stan The Annuity Man, America's annuity agent, licensed in all 50 states, including the beautiful one you're sitting in. So I'd love to speak with you. You can go to theannuityman.com and set a time to speak with me. You can go there to look at and use our proprietary calculators. You can go there to sign up for these books, which I'll send to you for free and under no obligation. So also too, if you want to comment on this video, hit comments, or you can go to my site and shoot me an email there as well. Hey, producer, the shirt, Pistol Pete, this is Pete Maravich. For the people out there, hang in there with me. He was my boyhood idol. I played college basketball. My parents were both college basketball coaches. Can you imagine that? Boy, what a tough childhood that was. But he was a great person, all-time leading scorer in NCAA history without a three-pointer. Good story. I found a picture of Pistol Pete the other day where I had him sign it to me, and it's really a treasure, and I'd lost it, and I found it, so now I'm getting it framed. So all for you Pistol Pete Maravich fans, if you don't know who that is, Google it. It should be fun. But we're going to talk about the best fixed rates. You can get pretty good fixed rates here, even in this low interest rate environment at the time of this taping. We're during the COVID times and interest rates are low, but there are some fixed rates out there, like a 3-year you can get 3%, a 5-year you can get 3.25% at the time of this taping. That's not bad. Hopefully it goes up from there, but I'm going to go over all of the fixed annuities in detail and explain current rates so you can start making a good decision. You can go to theannuityman.com, interact with me, and check out the rates there for yourself. But before we do any of that, hit the music. Okay, so I talked about the fixed rates, like the 3% for 3-year, the 3.25% for 5. I think there's a 3.25% for 7. Again, look at the date of this taping. Maybe 5 years from now, you say, what is he talking about? This right now, at the date of this taping, that's what they are. But I've written a book on it, Multi-Year Guarantee Annuities. That's the industry version of a CD. You give them money, give the annuity company money, and they pay you an interest rate for a specific period of time that you choose. Now, there's many companies that do that, and it's approved at the state level. So if you're sitting in Texas or Florida or Oregon or wherever, and I'm licensed in all of those, rates will be different, but we have a live feed of those best rates on my site where you can shop at your leisure without signing up and see what those best rates are. Again, theannuityman.com. But you're saying to yourself, wait a minute, how can an annuity company give better rates than a CD? Well, couple things. CDs typically from the shorter duration up to about 2 years have the highest rates. But once you get to that 2-year level and going out, multi-year guarantee annuities, once again, producer, multi-year guarantee annuities. Sorry about that. Yeah. She's like, Stan, hold it up there so I can focus. So I'll throw that down. Multi-year guarantee annuities are the industry version of a CD, and CDs and multi-year guarantee annuities work very well together. Now, the other CD type product is a fixed indexed annuity, but that's not going to give you that guaranteed interest rate, high interest rate you're looking for. Most people out there, the 10,000 baby boomers that's reaching that age 65 every single day, they want safe money. They want to hit bunt singles. I'm assuming that might be you. I mean, most of my clients like these fixed rate annuities because they know what they're going to get. It's contractual. There's no annual fees. There's no moving parts. It's just very, very simple, and they like that interest guarantee. And by the way, the unique part about multi-year guarantee annuities, aka fixed rate annuities, is when you buy them in a non-IRA setting, the interest grows and compounds tax deferred. Now, some multi-year guarantee annuities have simple interest, but the majority have compound interest. Either way, it's a good product for what I call hitting bunt singles. Now let's talk about the other types of rates. So people say, well, I'd never buy an annuity, Stan, because rates are low. What type of annuity are you talking about? There's numerous types. We just talked about multi-year guarantee annuities, which are those fixed rate annuities that a lot of people are looking at. But when you talk about rates for lifetime income products like single premium immediate annuities, deferred income annuities, qualified longevity annuity contracts, even income riders attached to some deferred annuities, all of those are lifetime income products. When you say rates are primarily your life expectancy at the time you take the payment. Remember that when you're talking about lifetime income products and you say the word rates, it's life expectancy. Now, interest rates do play a secondary role because all lifetime income from an annuity, regardless of type, is a combination of return of principal plus interest. But you have to look at your life expectancy. The older you are, the higher the payments. Why? Because you have less life expectancy. Sound familiar? It is. Social Security. That's an annuity. I know all you annuity haters out there go, well, I don't own an annuity. I'll never own an annuity. I heard this guy say never own an annuity. You already own one. It's called Social Security. I know you're saying, no, that's not it. Yes, it is. Why? Lifetime income stream you can't outlive. Annuity, lifetime income stream you can't outlive. The good news about Social Security, as I say in the South, Social Security, they don't say the IAL. Social Security is that it increases with inflation because our beloved politicians increase that. So it's the best inflation annuity on the planet. All right, so let's go back to the fixed rate annuities and annuities in general. Now I hold in my hand, producer, a gallon of milk, empty gallon of milk, and you say, why are you doing that, Stan the Annuity Man? I'm doing that because all quotes from annuities are like a gallon of milk. What does that mean? They expire every 7 to 10 days. Here's an annuity quote. All right, here's the 7 to 10 days. That smells good, it smells like milk. Here's 14 days. Oh! Or as my grandmother used to say, that's blinky, Stan. That milk is blinky. I don't know what blinky means, but it means spoiled in the South. So when I say annuity quotes are like a gallon of milk, that's what I mean. Put it in the back of your head. So if you see a fixed annuity rate that you like, or if I quote you a lifetime income stream, you can't just sit there and then 2 weeks later call me, I really like that rate, get that one to me. It happens to me all the time. By the way, that's Chester, the client voice. That happens all the time. In fact, the other day, got a call from a guy who's been using my site to check rates. He calls me up, he goes, I love the rates, I love the feed, and of course the Chester vote, I want that 3-year I saw last month at blah. Last month, gallon of milk, it's gone every 7 to 10 days. And that doesn't mean you have 7 to 10 days to decide. What that means is the application paperwork has to be at the carrier within that 7 to 10 day time period. Now, certainly we can help you with that if you want to purchase an annuity, whatever type that fits for your situation. And what I would tell you too, make sure that you talk to me before you buy anything. Do not buy the dream. Do not chase the unicorns and the butterflies. Annuities are not too good to be true. They're contracts. So I encourage you to go to my site at theannuityman.com and schedule a time with me. We'll go over all types of fixed annuity rates. But the bottom line is this. With fixed annuity rates, right now, you can get 3% or 3.25%. And you say, well, that's terrible. I remember Jimmy Carter years when they're 12 and 18. Of course you do. Jimmy Carter builds houses now. We're not going to see those rates for a long, long, long time. You have to maximize the rates now. You have to keep your maturity short. You don't want to lock them in forever, but you can get good fixed rates, contractual rates, not pie in the sky rates. And remember, annuity companies have the big buildings for a reason. Not only do they sell these fixed rates, they also sell lifetime income products so they know when we're going to die and they price things accordingly. They're not smarter than banks. They're just more regulated. So fixed rates, you might want to shop annuities. Hey, and I encourage you to go to this other video right here, What Are Annuities Paying? Please hit the subscribe button and I'll see you on the next Stan the Annuity Man video.